Hello and welcome. You know, building a family through surrogacy is just this incredible journey. But man, the insurance part can be a real headache. So today, we're going to demystify a huge piece of that puzzle, using ACA health insurance to protect not just your surrogate, but your bank account too. Let's jump right in.
We've laid this all out to be your complete roadmap. We're going to start with the biggest financial risk, and then we'll show you how the ACA is basically your financial shield. We'll get into the nitty-gritty of when to enroll, how to figure out the real costs, and then we'll cover the one detail you absolutely positively cannot ignore, the lien clause. And then we'll wrap it all up with a clear action plan.
So let's kick things off with the one thing that causes so much anxiety for intended parents. All those financial unknowns on the medical side of the journey.
Just think about it for a second. You've got all your planned expenses, right? But what's that one thing, that wild card, that can really cause the most stress and uncertainty? It's this, the possibility of unexpected medical complications. Look, you're always hoping for a smooth, easy pregnancy. But if challenges do come up, those medical bills can skyrocket, and I mean fast. We're talking bills that could derail your entire budget, maybe even the whole journey. And that's exactly why having the right protection in place isn't just nice to have, it's non-negotiable. So how in the world do you protect yourself from a risk that big? Well, this brings us to the solution. The Affordable Care Act, you've probably heard it called the ACA, is an absolutely essential tool for getting some financial certainty. In the simplest terms, the ACA created this marketplace where your surrogate can go and buy a standardized health insurance plan. Now, here's the most important part for surrogacy. A plan can't legally deny coverage or charge more just because of a pre-existing condition. And guess what counts as a pre-existing condition? An existing pregnancy. This makes it a perfect fit. So why is this such a game changer? Well, an ACA plan gives you that comprehensive maternity coverage, sure. But the real magic is that it caps your total out-of-pocket spending for the whole year. That cap is your financial shield. It's what stands between you and those terrifying six-figure surprise medical bills.
Okay, so we know what the solution is. Now let's get practical. You can't just hop online and buy an ACA plan any old time you want. The timing here is absolutely critical.
You really have two main windows to get this done. The first is what's called the open enrollment period, or OEP. That usually runs from November 1st to December 15th, and that's for plans that will start on January 1st. If you miss that window, your only other shot is something called a special enrollment period, or SEP. But you can't just decide to have one. It has to be triggered by a qualifying life event, like if your surrogate moves to a new county or loses her other health insurance. So planning your whole surrogacy timeline around these dates is really, really key.
All right, let's talk about the money. To really budget for this with confidence, you need to get your head around three key terms that basically determine your total cost.
First up is the premium. This one's easy. It's just your fixed monthly payment to keep the policy active. Think of it like a subscription fee. It's predictable, and you pay it every single month, whether you end up using the insurance or not. Next is the deductible. This is the amount of money you have to pay out of pocket for medical stuff before the insurance company starts to chip in. Once you've paid that amount, then the plan really starts to kick in and help with the costs. And finally, we have the most important number for your peace of mind, the maximum out-of-pocket, or as people call it, the MOOP. This is the absolute ceiling on your spending for the year. Once your payments for things like the deductible hit this number, the insurance plan pays 100% of everything else for the rest of the year. This is your ultimate financial safety net. So let's actually build a quick sample budget. Let's say your monthly premium is $600. Over a year, that's $7,200. Now, you add the plan's maximum out-of-pocket, we'll use $7,000 for this example, and your total maximum financial exposure is $14,200. That's it. That's your worst-case scenario. Knowing this number transforms this huge, scary, unknown risk into a predictable expense you can actually budget for. Okay, so you get the costs, you get the timing, but, and this is a big but, there is one hidden detail in some of these policies that can completely destroy all of your careful planning. It's called a lien clause, and you absolutely must know what it is.
So, what the heck is a lien clause? It's basically a provision buried in the fine print that lets the insurance company try to get its money back from a third party they decide is responsible for the medical bills. And in the world of surrogacy, that third party, well, that could be you, the intended parents.
The easiest way to wrap your head around this is to think of it like a car accident, right? Your health insurance pays your medical bills, but then it turns around and sues the driver who is at fault to get all that money back. With a surrogacy-unfriendly lien clause, the insurance company might pay for the pregnancy care, but then they could see you as the responsible party and come after you to get it all back.
I mean, the difference here is just night and day. Without a lien, your costs are capped, they're predictable, you're safe. But with a lien, all bets are off. Your costs are completely unpredictable. The insurance company might pay the bills up front, but then you could get hit with this massive demand for reimbursement down the road. The takeaway couldn't be simpler. You have to avoid these plans like the plague.
So how do you take all this information and actually put it together to make the right choice? Let's wrap up with a simple, actionable checklist to make sure you're on the right track.
Okay, here are your 4 key steps. First, plan ahead. You have to line up your surrogacy timeline with that open enrollment period. Second, budget smart. Do that simple calculation. Annual premiums plus the MOOP. That's your number. Third, and this is the big one, vet every single policy for a lien clause. Read the fine print. And finally, don't try to do this alone. Hire an insurance broker who specializes in surrogacy. Seriously, their expertise is priceless and can save you from making some incredibly costly mistakes.
So, we'll just leave you with this question to think about. Remember, getting the right insurance isn't just about paying bills. It's about buying peace of mind so you can actually focus on what really matters, getting ready to welcome your child. With these ideas, you can build a financial plan that is genuinely secure for the incredible journey you have ahead.